So how often should you refinance your mortgage? Here's the blunt truth. Most people refinance way too often, chasing tiny mortgage rate drops, right? It drops a little bit and they do a refinance and they do it again, and they end up losing money in fees, okay? So what I'm gonna share with you are some reasons why you should refinance your mortgage. So let's actually dive into this episode and save you thousands of dollars, okay, right now. So if you think that you should, again, refinance your mortgage every time rates drop, you're probably making a costly mistake. You don't want to jump the gun. You want to make sure that it makes sense, okay? Now, I personally would not refinance unless the rate dropped by 1%. And that's just personal opinion and personal comfort, right? I would feel comfortable paying the fees to refinance to do that. But a lot of people think that refinancing is something that you should do every couple of years, which you shouldn't, okay? Now, I do want to share with you that, if your credit has improved dramatically, okay, which means you would qualify for a much better interest rate on your mortgage, that could be also a reason why you should refinance, okay? Did your neighbor refinance and you're like, well, you know what, I should do it too, okay? That mindset can actually cost you a lot of money. All right, every refinance comes with closing costs, typically 2 to 5% of your loan, and that's not pocket change, okay? So how often should you actually refinance? Well, here's the honest answer. Only when it clearly improves your financial position. Let me repeat that. You should refinance only when it clearly improves your financial position, not emotionally, not because it feels right, okay? On paper, it has to make sense. So I'm going to share with you some specific reasons why you might want to refinance, okay? You have a significant rate drop, like I mentioned, okay? I wouldn't do it unless I'm saving 1%, but if you can lower your rate by about 0.75 to 1% or more, it might be worth it. Again, look at the closing costs and see if it makes sense. The second one is, you plan on staying in the home. You're going to stay in the home for a while. Now, if you're moving in a couple of years or so, refinancing is a bad move. I'm telling you right now, okay? Because you won't get a good return on investment, okay? Number 3, you improve your loan terms. Maybe when you bought the home, you had private mortgage insurance, PMI, and now you have equity in the home to where you can remove that PMI. Look at the savings of that, how much PMI is on your loan, and see if that's worth the savings. Let's say it's $100 a month and you save $100 a month. Well, that adds up, okay? Or maybe you are thinking about switching from a 30-year fixed rate mortgage to a 15-year fixed rate mortgage. That's a great reason why you should refinance, as long as your interest rate doesn't go up. Your payment will go up because it's a shorter term, but you're paying a lot less in interest. You'll save thousands, okay? Number 4, again, you're eliminating PMI, private mortgage insurance. Okay, I mentioned that actually. Number 5 is debt consolidation carefully. Some people don't feel you should use your home's equity or refinance to pull cash out to pay off debt, higher interest rate debt. I say rolling debt into your mortgage can help. However, don't rack that debt back up. Many people have done this. When I was in mortgages, I've seen this where people would get a home equity loan, right? Or they would do what's called a refinance cash out, where you change your first loan, you increase the loan amount, and you get cash back, the difference. I've seen people pay off debt, and then what do? They rack up credit card debt again. Puts you in a worse financial situation. So debt consolidation is a great reason to refinance if you have a strategic plan and you're not just racking up debt on your other cards that you paid off, okay? Now, the break-even rule, okay, this is something that I want to share with you. So this is the part most people ignore, and it's the only math that really matters, okay? So you take your refinance closing costs, you divide it by your monthly savings, and that's how many months it takes to break even. Again, refinance closing costs divided by your monthly savings, and that's how many months it will take to break even. If it takes 3 to 5 years to break even, you better be staying in that home, okay? So here's the reality, okay? Refinancing too often resets your loan term, okay? Adds more interest, which means you could be paying interest all over again, like I just mentioned, and staying in debt longer than you need to. That's how your bank wins, okay? People hate banks, whatever, they can say what they want, but people, homeowners sign on the dotted line, and they just oftentimes don't know, they don't do the math. They don't know what the break-even rule is that I just shared, okay? So how often should you refinance? As little as possible. As little as possible. Don't do it too often, because it just resets you. It just does not help your financial situation if you're refinancing too much. Hope you found this episode valuable, and please watch the other videos I have on my YouTube channel. I appreciate you watching.